Once you understand the objectives and once you understand the principles driving the objectives, you can then start to see the commonalities of the strategies that different regulators adopt.
Hey, welcome to the FinTech Frontlines by Cora. This podcast is a collection of timeless ideas on how to build, launch, and operate a fintech in Africa from the most experienced minds in African fintech. In this episode, Marietta, Global Head of Licensing at Cheaper Cash, talks about how understanding general objectives of regulators can help you stay on their good side. She also breaks down the roles of regulators and how to align yourself with the framework.
The most common pitfall is a lack of understanding of the objectives, principles, and strategies of regulatory plans. And why I say that is, in my particular role, I have benefited from being able to deal with multiple regulators in different countries. And I have seen several commonalities in terms of the approach, perhaps the objectives that they want to achieve, the specific, policy objectives that they want to achieve may be different, but their objectives are generally the same, which is they want to safeguard consumers because financial services is sensitive. They want to stabilize the financial ecosystem, and they want to promote competition. In other words, they want to deter monopolies from developing because monopolies impact efficiency of markets. And so when you start to think about why is the reason, what is their why as regulators, you have to think about what is the impact of a financial crisis in a country or in an economy, and how wide-ranging is that impact. It basically impacts the whole society. So you can create situations of political instability, civil strife, social disintegration, increased rates of crime, all stemming from a financial crisis. And we have several examples. I think the most recent example is the 2008 financial crisis in the US that then caused a global financial meltdown. And it was precipitated by specific players in the industry who were taking specific risks. And so regulators are concerned with institutions, individual institutions, because those institutions pose a risk to the ecosystem. So an institutional failure has the capacity, depending on how that institution operates within the ecosystem, has the capacity to precipitate a crisis. And that crisis has very wide-ranging effects, not just at a national level, but even at an international level because of the level of interdependence we now have and connectivity in a globalized environment. And so how do regulators address those risks? They create rules, and those rules apply to all players because all players have capacity to disrupt the existing ecosystem, depending on what they're doing and the product that they're providing. And where those players refuse to comply with the rules, regulators enforce against them. And so once you understand the objectives and once you understand the principles driving the objectives, you can then start to see the commonalities of the strategies that different regulators adopt. So we've already talked about one, which is rulemaking. We create regulations, we pass laws through the local parliaments. And then once we have the rules, we supervise. So we can request for reports, we can invite players to meetings, we can initiate audits of different players within the ecosystem. We can also require that players in the ecosystem get specific certifications. So for example, if you want to provide a remittance service, you get a remittance license. If you want to be a payment service provider, you can get a PSP license, different certifications. And then finally, again, for those players that are unable to comply with the existing rules, there is enforcement, and enforcement serves two purposes. One is to punish the behavior that regulators do not want to see, but number two, it is a deterrent against other players in the industry that would want to participate in that behavior. So once you understand the objectives and principles, the strategies, then the processes start to make a lot of sense. So the pre-licensing, the application, the conditions that players are required to comply with, audits that you are then subjected to, and even the outreach and the lobbying and the engagement that you then see from players within the industry, it all comes together, in a way that starts to make sense and then can be applied to different organizations at different stages of their development. So basically, what is missing within the industry is that lack of understanding of those principles, those foundational principles that then allow different companies, different startups at different stages to understand how they can align themselves with the existing, regulatory framework.
Thank you for listening to this episode of the FinTech Frontlines. For businesses that are bullish on Africa, Cora provides all the support you need to start and scale with delightful payment products for collections, payouts, and settlements. Learn more at corahq.com.